Well, stocks are falling as Treasury yields pop. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all lower today as short-term Treasury yields rally following hawkish comments from Fed Chair Jerome Powell. The one-year Treasury yield is up nearly 20 basis points today to 2.07%. The two-year yield, is up 17 basis points to 2.75%, and the five-year yield is flat at 2.98% after popping above 3% on Thursday. And this rally comes after Powell officially put his support behind larger and faster rate hikes on Thursday. In a speech, he said 50 basis points will be on the table for the May meeting. And CME Group's Fed Watch tool shows about 98% of traders expect a 0.5% rate hike next month. And the outlook is getting even more aggressive for the June meeting. Nearly 94% now see a 75 basis point hike, 0.75%, happening at the Fed's meeting in mid-June. And oil prices are continuing to fall today as demand concerns outweigh supply worries. West Texas Intermediate crude futures falling 1.7% to about $102 per barrel. Brent crude futures, meantime, are down 1.8% to about $106 per barrel. This drop comes amid global growth concerns following Powell's rate hike talk on Thursday. China's largest city, Shanghai, is also slowly emerging out of a COVID lockdown. The city announced a new round of mitigation measures today, including daily testing. And the European Union is also still considering a ban of Russian oil, but has not yet made a decision. Experts say the oil market will remain volatile for the foreseeable future. Now, in earnings news today, Snap shares are up about 3% after the social media company reported a challenging Q1. Snap reporting a loss of 2 cents per share versus analyst expectations for a slight profit. The company's $1.06 billion in revenue was also just shy of analyst estimates. But Snap did report strong user numbers. Global daily active users rose 18% year over year last quarter to 332 million versus 330 million expected. And average revenue per user was also up 16.8% year over year to $3.20. Snap did forecast Q2 revenue growth between 20% and 25%, and said it expects to have 344 million users by the end of June. Meantime, Kimberly-Clark shares are rallying about 9% today after the company beat Q1 expectations and hiked its guidance. The consumer products company reported adjusted earnings of $1.35 per share on $5.1 billion in revenue. That was better than analyst expectations on both the top and bottom line. Kimberly-Clark now expects sales to rise 3% to 4% in 2022 versus the previous forecast for 1% to 2% sales growth. Kimberly-Clark did reiterate its adjusted earnings guidance at $5.60 to $6 per share for all of 2022. And meantime, Gap shares are plunging nearly 19% today after the company slashed its Q1 outlook. The clothing retailer also announced that the CEO of its Old Navy division will step down this week. Gap now expects its revenue loss in Q1 will be in the low to mid-teens versus previous guidance for a loss in the mid to high single digits. Gap cited macroeconomic dynamics as well as the execution challenges at the Old Navy brand as reasons for that downgrade. The retailer will report earnings on May 26th and said it will provide updated full-year guidance at that time. Now, in the economic news of the day today, new surveys show high inflation weighing on U.S. businesses and consumers. The S&P Global Flash Services Index tumbled more than 3 points this month to 54.7, and that's a 3-month low for the survey. New sales at services-based businesses rose at the slowest pace in 3 months, while a record high amount of business owners said they raised their prices. And those price hikes came in response to the fastest cost increase since October of 2009. But the manufacturing sector is looking a bit better. The manufacturing index rose nearly 1 point to a 7-month high of 59.7 in April. Now, these surveys used to be known as the IHS Markit Services and Manufacturing PMI, but IHS Markit has now been acquired by S&P Global, That's where the name change comes from. All right, and looking ahead to next week, it is the big one for Q1 earnings. Highlights include Microsoft, Google parent Alphabet, Meta Platforms, aka Facebook, Apple, and Amazon, plus a whole lot more. So be sure you're subscribed to my Coffee with Greta newsletter to get details on all of those earnings in your inbox every day before the market opens. And I'll see you back here for the Wall Report next week. Have a great weekend.